Welcome back, guys. Coinage here, back at it. So in this video we're taking a look at AJ AUD JPY, Australian dollar against the Japanese yen. Taking a look at this forex pair. So I'm gonna discuss a couple trades I took. I took a total of 3 different trades. 2 of them were losses. The last one was a winner. The last one, basically, I got a little bit in profit, but gonna go over my trades. That way, you can get, improve my skills. And, it's just good to journal and kind of take a step back and, see what I could have done better. And, it's good to kind of like back test in this way. And, that way moving forward, you take more educational trades. So this is for educational purposes only, so let's go get right into it. So yesterday I took a trade right around this vicinity right here, and I did get taken out by this hammer candle right here. I did get taken out by that. Now AJ is overall bullish. I had, a lot of confluences, so I was, only looking for buys at this point. And, the reason being for that, I personally had a strong bias that it wasn't a move up. Just, to create this M pattern as it actually did do this. When I was looking at it, it was around this area, so, but it did do that. And just because a lot more traders would be interested in this area, or it could possibly continue to move upward from where we are currently at. That way it could, a lot more traders would be interested, and that way the market maker could manipulate and do what he wishes to take more traders out. So that was one huge confluence. Other confluence was, it was trading above this 50 moving average. The 50 moving average is the orange area. Yesterday, gold was just on a rampage. It was just, really bullish. So that was kind of another thing, because AJ is also very much bullish. So I'm going to go ahead and discuss the trade that I took. So the first trade that I took was right around this vicinity. And I did get taken out by this hammer candle right here. Not sure exactly where I got taken out, if it was somewhere right here or maybe the very bottom wick. Not exactly sure. But if I take this tool here, not sure what happened there. But we take this tool here, this measuring tool, from this bottom area. I took it around here, so I got taken about 18 pips. However, this trade would have lost regardless, because it ended up going all the way down here, so I would have been taken out regardless. I use a 10 pip stop loss up to a 15 pip stop loss, depending on how good I feel about the trade. But one thing I do plan on implementing here moving forward is, instead of taking a market order, why not put a limit order minus 5 pips, to give you a better chance. Now there is that possible chance that, the market could continue to shoot upward, and then therefore you miss that as well. But a lot of times when I do take trades, a lot of times, there is, 5 pip drawdown or a little bit more before moving upward. So I took it around here. Had I put a 5 pip, minus 5 pip from where I take it, limit order, if we look here And I did use 15 pip stop loss on this trade. If we look at it from right here where it wicked down, and right here, it was about an 18 pip stop. So if I would have used a -5 pip, that would be somewhere around this area. So I still would have been taken out by this big green wick right here. So that trade would have been lost. Now, I admit that I probably should not have taken this trade. I should have been more patient till it gets closer to this 50 moving average. So definitely needed to be a lot more patient right here. I did see that it wicked the high, getting people to think that it wasn't a sell off, and it actually did temporarily sell off. But I still had a strong bias that it was going to move upwards, so I got taken out. Now I went to the 5-minute time frame and this 15, and it was looking pretty good. I saw that, yeah, I got taken out, but I saw opportunity. So I went again and I took a second trade right here. As you could see, I entered, I don't remember if it was this candle or the next candle. Like, I just jumped right back in. And this time, I believe I used a 10 pip stop loss. I'm not sure why it's doing this. Okay, I used a 13 pip stop loss. Now, again, if I would have implemented that -5 pip, like, where it looks good of an entry, if I would have used -5 pips, it would have triggered and this would have been a successful trade. So that would be somewhere around this area. It would have triggered right here. 13 pip stop loss. You could see it. This would have been a winning trade. Let's see if we look at 5 pips from where I entered. So you could see, that would have been a winning trade. So it's something that I'm considering implementing moving forward. I want to stress test this new strategy of where, it looks like a good entry. Go -5 pips and put a limit order and, use either a 10 to 15 pip stop loss. So really considering doing that moving forward. Now, what I use is I do twin trades. So I take 2 trades on a trade. So basically I go 1-to-1. That way, if it takes a TP right here and it comes all the way back down, then it'll be a break even because I take 2 trades. So it would take profit. And then on the second trade, the second twin trade, I do a 1-to-2 or a 1-to-3. If it's late in the week or whatever, if I'm up in a lot of profits for the week, then I'll probably go like a 1-to-5 on that second twin trade. And on this trade, I would have made quite a bit of money on this trade because on that second one I did put a 1-to-5, and you could see I would have hit. But I did take a loss there. Now my last trade, it was somewhere around 4:30 when I was waking up from work to get up to work, and I saw it was in this area, and I just still had this strong bias that it was going to buy. I kind of over leveraged on this trade, which I know I should not have done. So I took a market order. I'm not sure exactly where I entered. It was somewhere around 4:30. Did have some drawdown. Use a 13 pip stop loss as well. Did have some drawdown. Not as much, but then I ended up winning it all back and just a little bit extra. But you know, even on this last trade, if I went minus 5 pips, you know, it would have triggered that. I would have had less drawdown, and you know, it would have gone my way. So it's just something interesting, you know, that I'm gonna be stress testing here moving forward, where it looks like a good entry, minus either minus 3 to 5 pips, limit order, and I'll be doing that. So I'll keep you guys posted on that. You know, trading is like fishing. You know, you place your hooks right there, and you know, sometimes you catch one and sometimes you don't. So going to be implementing that moving forward. Now I know that, like, you know, this trade that I took the other week, I had absolutely no drawdown, and right here, had I put a minus 5 pip stop loss, you know, I would have missed this whole trade. But again, that's okay, you know. I mean, with trading, you got to have a non-attachment mindset. You have to have, you know, a peaceful state of mind. And you know, not every day, you know, you're gonna catch a fish. So you know, you gotta just cast your hooks and, you know, wish for the best. But that's what I'm gonna be implementing moving forward. Just thought I'd journal this because this was very interesting. You know, lost the first trade. Second trade would have gotten it. You know, had the correct direction. Just literally just, you know, a couple pips off, about 3 pips out. 3, maybe 4 pips because of the spread, but you could see, you know, just barely got taken out there. But look at this crazy move right here. Let's go ahead and measure this. You know, it went, what is that, like 100 pips right there. I mean, that is very nice right there. But yeah, I just thought I'd journal this, and yeah, so let me know in the comments of what you think of this, you know, minus 5 pip limit order, of where you would normally take your trade. And have an awesome rest of your day. Peace out.